Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some Bulletin board hero stocks on Tuesday, December the 9th. I'm starting off with MX Oil, where it looks as though there's finally scope for a turnaround here after the extended basing towards the 2.5 pence level that we've seen over the past couple of months. Also, a support line in the RSI window from the beginning of November, which has been double tested over the last few weeks, and also yesterday's price action breaking through the 10 and 20-day moving averages at 2.48, and they've both crossed. So we have notional end of day close stop loss at the 20-day moving average. If you're cautious, you wait for an end of day close above the blue 50-day moving average 2.78, but it does look as though enough work has been done, especially with the RSI breaking through neutral 50 to stand at 52 for the upside to start to come through. Initial target probably October resistance at 4 pence, and that's towards the top of this falling channel from July, which has an implied 4.5 pence target over the next 6 to 8 weeks. At this stage, only really back below this July support line around the 240 pence zone would be outright negative. Next up is Oilex, which has been a favourite of mine, but not behaved quite as one would have liked over recent months. The spurt that we had over the summer fizzled out, and there was the break back below the 50-day moving average at just around the 9 pence level over September. But it does look as though we've got some or a decent buy signal here in terms of the break back above the old 2.8 pence floor of October, and this bear trap rebound also takes the shares back above the 20-day moving average at 3.28, which is the end of day close stop loss at the moment. Overall, we've got a falling triangle or a bullish falling wedge, and that should lead the shares higher back towards the 200-day moving average at 5.9 pence. If you're cautious, you wait for this resistance line from the summer to break, which is also the level of the 50-day moving average at 4 pence before taking the plunge on the long side. Another situation which has been in focus for much of the autumn is Sula. Here we've had the shares starting or attempting to deliver a rally or an extended rally. We've had a few full storms along the way. Obviously, the big move here was at the turn of the year with a massive move from around 1.25 pence to 4.5 pence plus 5 pence even. This overall pattern here is a triangle formation. You could obviously wait for the triangle to break at 3 pence, but at the moment, the 50-day moving average at 1.93 pence looks like a decent end of day close stop loss level as we try to chase the 3 pence level at the top of this formation. Obviously, a weekly close above that could take the shares back to 5 pence plus reasonably quickly. Only at this stage, only really back below the 1.75 pence level, which is this support line from December last year, would be outright negative on the stock. Finally, finishing off with Tern, which looks like an encouraging situation from a technical perspective. Here you can see that there's been the initial push through the 200-day moving average, classic sort of situation after the extended base, so that there was towards the 1.5 pence level going into the summer. Then there's the consolidation of this push through the 200-day line, which is currently at 2.52. Most of the consolidation has been at or above the 50-day moving average at 3.56 pence, and that's the stop loss as we try and chase the shares higher. We're hoping that there'll be an imminent move to the upside now through the recent resistance zone around the 4.5 pence level, and if that can be seen over the next few sessions, then the implied target here is as high as 7 pence, which is the top of the September rising trend channel. There's also backing here from a double bounce off the RSI support line from last month, currently running just above the 50 level. That's it from me. More updates at spreadbetmagazine.com.